A very good afternoon, ladies and gentlemen. I welcome you all to this Breakaway Session 6 of Sa-Dhan National Conference. This panel discussion would discuss on celebrating financial innovations, reshaping the financial inclusion landscape of India. In this session, we will discuss on how innovations have enhanced accessibility, affordability, and quality of financial services, enabling the entire ecosystem, including microfinance, formal banking, and fintechs to grow sustainably and inclusively. So we have a distinguished panel of speakers. I would please join me in welcoming these speakers on stage. The session will be moderated by Mr. Shishir Sinha, Associate Editor, Business Line, Mr. Subrat K. Nanda, CGM-IDD NABARD, Mr. Chitrabhanu KG, Executive Vice President and Country Head, Agri, MRBD and Gold, Federal Bank, Mr. Jagadish, Babu, MD and CEO, Pragati Finserv, Mr. Ajit Singh, Director, PwC, and Mr. Samir Nagpal, COO, Spice Money. I welcome you to kindly join us on stage, please. So from NABARD, we are joined by Mr. Nabin Kumar Roy. Over to the moderator, Mr. Shishir Sinha.
A very good afternoon. Thank you very much for giving us opportunity to talk about financial inclusion. And I would like to take you back to 2014. On August 15, 2014, when Prime Minister Narendra Modi announced about one of the biggest financial inclusion initiative in India, and that was Pradhan Mantri Jan Dhan Yojana. Within a month or so, we have more than 1 crore account. And today, if I take the number, it is around 56.93 crore account, and the amount in those accounts is more than 2,71,000 crores. It's not a small amount. Now the big question is that we have done some groundwork in the financial inclusion. What next? And to talk about all those things, we have the eminent people who are going to talk about what are the challenges, what are the solutions, and what is the way ahead. But before that, let me give you my opening comment on that. And that opening comment is about that when we talk about financial inclusion, should we start with the financial literacy and then we go to financial inclusion, or should we go for first financial inclusion and then go for the financial literacy? Because financial literacy is also about financial attitude, financial behavior. And when you are giving an opportunity to someone who has not having any bank account throughout his life, how he is going to use that bank account? The other thing is that now the financial inclusion has moved one step forward. We are not just talking about banking, we are also talking about insurance. Now we have moved from what we call as the Jan Dhan se Jan Suraksha. So we are also talking about the insurance scheme. Again, I'm posing the big question is there, should we first talk about financial literacy or should we first talk about the financial inclusion? So what I will do, I will request each of our panelists to give their opening remarks, and then I will have the question and answer session. So first of all, Mr. Nabin Roy, he is General Manager, NABARD. Mr. Roy, yours.
Good afternoon to all distinguished audience here. You must be aware that NABARD has been at thick of things through the SHG bank linkage program that started way back in 1992 in India. And we have been doing what is now being termed as financial inclusion from a pretty long time. If it is 1992, so more than 3 decades that we are into, enhancing the capacity of the people, especially the women folk. And we have been telling them all about fiscal discipline. We have been also telling them about the need for cycling the credit that is there. So, in a nutshell, financial inclusion has been in the thick of things what NABARD has been doing. You take any flagship program of NABARD, financial inclusion connotations, components, initiatives have been inbuilt very much there. On the question that Shishir ji has said, that whether it is financial inclusion that we should be talking about or the financial literacy first. So over our experience from NABARD side, it would be that it is very much important to showcase a model that this is being done, this is doable, and this can only enhance if financial discipline, planning, etc. is inbuilt into it. So the way I have put it, meaning thereby that first we have to set a model. So Pradhan Mantri Jan-Dhan Yojana is a big example of that. First the accounts were opened. And you must have had the reports, the audience, August audience here. You must have got the reports that out of 100 accounts of Jan-Dhan, 60 accounts were dormant and all. And now the second impetus is coming. So a model is being placed before, because here as a commoner or a common person, for us it is more important to see a lemon in your plate than to know that this lemon, when extracted, will give you 5 ounces of the lemon juice. So, to have the lemon first is to have the financial inclusion plans and the models in place so that people appreciate that this is the pathway. If you do it rightly, then the literacy parts comes in. With that, I'll conclude on the first part. Thank you.
Yeah, that's a very great example, that first you have the lemon, then you can think about how to squeeze that, how much actually juice you need that. So let me move to from NABARD to a bank, which is a federal bank, and we have with us Mr. Chitrabhanu. Mr. Chitrabhanu, let me start with you. As a banker, what are the things which you think, like he talked about that first we have to put the lemon. Do you think that the juice should come first or the lemon should come first? As a banker, number one question, and number two, what are the basic problems when you are talking about whether lemon or the juice?
Yeah, good morning everybody, and thanks for this opportunity, Sa-Dhan. So the last 1.5 days has been very inspiring for me. So in terms of listening to all of the people here. So rather than sitting here and talking, so all those days give us a lot of insights about what is happening right here in the lower end of the segment. So I think it was really inspiring, and thanks. So this question which you have asked, it's more like a chicken and egg story. So which comes first, whether it's the chicken or whether it's the egg? From a banker's perspective, we always say that financial inclusion always follows a financial literacy program, because in terms of risk mitigations, we should know what are we lending the money for. The regulator, the bankers, etc. look at credit in that perspective. So
Please bring the microphone closer.
Is it better?
Yeah.
So if you're giving consumer lending, maybe it's different. But the problem in this particular strata of society, the lower end of society, is that you don't have your credit marks of this customer in the CIBIL or CRIF or any other CIR reports. So what you do is to understand whether that particular venture he's going into is profitable or not. So it's very important in that perspective that bankers look at whether you are giving to the right segment of customers. To that effect, I believe that, while I know financial inclusion cannot happen much beyond, much later, because in the end of the day, the customer wants money to run his projects and to ensure that he grows. So it should, in some sense, be an invisible supporting engine for any financial literacy programs. Mm-hmm. So it's always a part of this. So I always believe that, because in the end of the day, for us as bankers, the last mile is always difficult, because for the normal retail clients, etc., you have a lot of other options. The customer per se will come to a branch because he has time. But in terms of the lower segment of society, for him, time is money. Each day lost for him. I was hearing to one of the other speakers here, each day he loses, it's the money for the day he loses. So in that sense, he cannot come to a branch, he might find it difficult. So that last mile is always very difficult. So we should have visibility on what the customer is doing through various digital initiatives, etc. and should be able to lend the money very invisibly to him. So I think that's actually a challenge, but that's something we all together as a partnership has to get it done. So I believe that financial inclusion to some extent should follow financial literacy programs, but should not be too late. It should not be a big laggard, it should be along with it.
Yeah, that's very important part. And one thing we should remember that in India, the level of financial literacy is so low. I mean, if I go by a study by SEBI and RBI, that shows that almost 27% people, and in India, just 5.2% people are highly financial literate. So even if you are going to someone who is completely unbanked, there the financial literacy is very low and that percentage is very high. So that is why I asked this question. Now I will move to NBFC, Jagadish Babu. He is from Pragati Finserv. Jagadish Babu, what is your take on the entire debate on this thing, reshaping the financial inclusion? What are the things which you as an NBFC is facing and what kind of solution you are providing to that?
Thanks, Shishir. Good morning, and thanks, Sa-Dhan, for having me on this wonderful panel. I'm talking about financial literacy. I remember this example from childhood days. Banks would give a small clay pot, put savings, coins into the. So that was the first example of financial literacy that you end up seeing. But the kids have time to grow up, right? So you expect them to start saving in a pot and then over time open a bank account. Unfortunately, the working people need a solution faster, right? So the Jan Dhan whole program, definitely the Jam Trinity, not only the bank accounts, but the access to mobile, the universal eKYC, the other identification, and the combination of all these three, the public stack which got built out, definitely allowed us to innovate a lot in terms of what are the products that we take to the field. If you look at financial inclusion from 1992 to 2012, 13 was one style. There was hardly any innovation. It was the same standardized, mass standardized process, people-oriented process. But you see the explosion of innovations from 2012, 13 to currently as we speak, last 10 years, with Aadhaar, eKYC, the e-sign, today customer can get an instantaneous digital receipt. The moment you make a payment, you get an instantaneous receipt. So there is definitely the whole public stack the availability of the public stack has allowed institutions like us to make use of that and make more financially relevant products for the lower strata of society, working society.
Thank you very much. First, we will take Mr. Samir, and then I will come to Mr. Ajit, because Samir is almost in the same business with Mr. Jagadish Babu is doing, that is providing solution to the end consumer. So basically, you are working as a bridge between the institution and the final consumer. So, Samir, let me ask you that what kind of challenges you face in providing solution to the end consumer?
Thank you very much. Am I audible? Okay. So I represent Spice Money and we are a rural fintech. The basic problem that we are trying to solve on ground is the problem of access to rural consumers. So look, what has happened in the last 10 years, because of the Jam Trinity, the Aadhaar stack, the consumers in rural have been able to open accounts. The proceeds to these accounts has got formalized. Thanks to government, the push from the government and also the acceptance from the ecosystem that this money has now started landing into a bank account. But if you reflect on this, the number of bank branches and the ATMs in the country has just not increased in the last 10 years. Nothing to blame, it's because there are high capex and opex costs and therefore it's not really feasible for a bank to set up a branch or open an ATM. And that's the place where our role comes in. So what we've done over the last 10 years, we've built a physical network of nanopreneurs on ground. We call them as adhikaris. And we work with almost 1.5 million such adhikaris on ground. So, Shishir ji, to your question, what is the biggest challenge that we foresee on ground? The biggest challenge is the trust. The trust, the confidence to be able to rely on someone who doesn't represent a bank, and how does he really become a part of that community, so that while today he is able to open accounts for them, tomorrow he is also able to convince them, upsell other banking and financial services. And this is the journey that we've traveled with our Adhikari network over the last 10 years. A network which used to be only a cash withdrawal network is very beautifully transforming into opening accounts, being able to help them generate lead for credit products and also get access to simple investment products. So the challenge is trust, but how this challenge can be solved is through coming together, collaboration between banks and fintech. On both these sides, there has to be a belief, and this network that's got set up on the ground has to really play a very, very vital and important role in walking an extra mile. And I'll explain this. And we've seen this in our network. Adhikaris who are go-getters, who are willing to learn new product, when we look at their performance is much ahead of Adhikaris who really want to be involved into a transaction service. So they are, one, able to sell multiple products and services. Also, when we look at the accounts opened by them and the balances being maintained by consumers, the balances are much, much higher, which means that if someone can be a torch bearer on the ground, take the lead and handhold the consumer, one, he is able to sell multiple products and services, and also nudge them to rise up the ladder of financial services product.
Okay. Mr. Ajit Singh, let me come to you. Since you represent a consultancy agency and you have done a lot of study on this issue, so how this landscape has changed over the year?
So,
please take the microphone.
Yeah, you'll have to.
Hello, am I audible?
Yeah.
Firstly, thank you so much for providing this opportunity to us. I would want to just quickly touch upon a bit of on the landscape aspect of it, touching on to the point that Samir and Sir said. If you look at a rural per se, about 23,000 odd RRB branches who are operating in rural areas. Then there are about 370 odd DCCBs at a district level they are operating. Followed by, as part of the 3-tier structure, there are primary agricultural credit societies who are actually operating in the villages. RRBs are actually sponsored and helped by their sponsor banks. So now with the consolidation initiative which has started, what has effectively that initiative has done, if one bank doesn't have certain facilities, let's say if one bank doesn't have NEFT or RTGS or one of the channels, the incoming bank has it. So suddenly the customers and the bank have access to whole new facility which otherwise that region, that area was not happening. So this is point one. This is what essentially is enabling one of the situations. Secondly, I would want to touch upon is on the capacity building aspect of it, which Samir talked about at a PAX level. Yes, we have PAX computerization as a project which PwC is doing along with NABARD, and we are seeing some of the benefits of that. But essentially on the capacity building with regard to the staff who's getting deployed over there, their knowledge levels, what will hold key is the partnerships that Samir talked about. We should have a partnership model between these banks and the trust coming over. That again will come through by analytics and data. There are a lot of microfinance companies and with land digitization, etc., happening going forward. We see we should be able to underwrite some of the customers, some of the issues that typically we face to underwrite a customer. We see that that should be possible going forward. And Government of India is also talking about coming up with a credit score for every, for a rural credit score. That should also help. This is on the lending side. Likewise, on the banking correspondent side also, there are a lot of banking correspondents who are tagged to various commercial banks and various institutes. So the way it has evolved is a combination of BCs who has actually helped drive the agenda, and a bit of capacity building at the grassroots level of the financial institutions. We are talking about packs converting into M-packs, trying to get more, contribute more into the entire agri aspect of it, where you don't restrict yourselves only to credit, but provide other facilities also. I think that would be the way forward, and this is how it has been evolving.
Okay, thank you very much. Mr. Roy, I will come to you. That is about the financial discipline. When we talk about financial inclusion and when the borrowers are the small borrowers, so what kind of financial discipline you are seeing among them, especially I'm talking about in terms of non-performing asset?
First of all, I'll start from what Ajit ji told. We're looking at digital space for, ushering in a lot of these disciplinary measures, including transparency and governance, because when data speaks a story, on the ground it cannot be otherwise. So that is as true as that. So we are with Government of India right now engaged in computerization of primary agriculture cooperative society. And here in this hall probably will not appreciate, but it is almost like in parts of the country, recreating the data from time immemorial. There are absolutely no data. You know how if you are a very concerned person for how the rural cooperatives work, they are all 1% driven or a 2% driven, where there are a lot of data mismatch. Those things have been taken care, ironed out. Now more than 30,000 packs are on digital platform. Their transaction, meaning thereby, their transactions are now recorded on the computer, on a ERP software. I think PwC has teamed up with NABARD's workforce, and we are doing it through government, state governments as well as central government. So that is one part. Second part would be regional rural banks amalgamation has taken place. Now the country has 28 RRBs on from 1st of May 2025. Another challenge is there. X regional rural bank and Y regional rural bank have very diverse kind of approaches to lending or to customer service because of various legacy issues. So what we are doing is again coming up with a common digital platform, which we are trying to negotiate, because that will have a lot of data stacks that needs to be used, like Aadhaar, like farmers data or Udyam portal data or Swamitwa card. So many places data is available. So there has to be a common console which speaks with everybody and gets a data which the banker requires sitting in a branch to take a decision. So that we are already working on, and I am happy to share with you, sir, going on that line itself, that NABARD has now floated a company called Sahakar Sarathi Private Limited, which is taking care of rural cooperative bank. You heard Ajit ji give you the figures, so many packs. So they are all in different fora, different levels, because they'll have wherewithal to buy one software, but maintenance and updation will be an issue. So we are coming out with that Sahakar Sarathi will host the whole set of ecosystem, and that can be tapped by all these rural cooperative banks to smoothen and streamline their processes so that they become very relevant. To mark it, 30 years ago, more than 20% agriculture credit flowed through, and if you go back, it was more through the cooperatives. And as of 31st March 2024, its share has declined to 8.7%. So that is a concern, and which is because the customers, even though they are members of the primary agriculture cooperative society, they are weaning away to some other banks with tech-enabled services, and because that suits everybody. Everybody would like to have mobile, their banks on the mobile, the KCC on the mobile. On that also platform, on that front also, e-KCC is being tried. NABARD is also using RBI Sandbox for launching the central bank digital currency based transaction. already the Reserve Bank of India is coming out, ULI, UPI is already stabilized, that's a thing. So, in the nutshell, digitalization is empowering institutions like NABARD to infuse sense of fiscal discipline into the system.
That's a very interesting point you have given, that how that fiscal discipline is brought into that. Now I will come to Mr. Chitrabhanu sir. One thing which is always said, that the small borrowers are much more disciplined as compared to the large borrower. And in terms of NPA, their share is much lesser than the bigger one. What is your bank observation on this issue?
The recent issues which we have faced in microfinance, I'm sure we need to take it differently, because in the last 1 year we would have seen a lot of issues, especially in specific markets wherein the NPAs have gone up, especially on the JLG side of lending. That said, and with specific focus, maybe that's one reason why the focus has been on funding the ladies as a part of any financial inclusion program. But our experience in some sense, if I'm not impacted by that, jaundiced by that last 1 year, I believe that the level of financial discipline that the rural people, but just one point on this. Sometimes the people in the rural areas do not have enough money itself. Forget about financial discipline. Each day of their livelihood has to be met, and they have to find ways of investing into the education of their children, into various other requirements, etc. That they don't have sometimes even time for a financial discipline. They don't have time to invest into, maybe you have a Jan Dhan account which has been opened by them as a part of the government initiative, but subsequently is money coming into these accounts as a part of their savings, etc., something which needs to be thought through. One problem in that for banks is that initially, while the banks would have reached out to all these customers and got these accounts opened, are you able to engage with these customers subsequently, like what you're doing in the middle level of strata of customers, or maybe the higher end, when you engage with these customers and ensure that their money or cash flow comes through these accounts? But it has improved to some extent because of the UPIs and all those things, wherein locally people are able to now buy and sell. In the previous session also, we saw a discussion about a chaiwala also not asking for money. He is asking for a UPI transaction so that his score keeps improving. So I think these understandings people are getting. But again, as the first point you mentioned, it all depends upon whether he gets to understand what finance is all about. How does he use finance as a way to grow his livelihood? It takes time. But at this point of time, I would say that it's just the start of this entire evolution of getting into understanding finance better and ensuring that they are actively managing their finances so that their overall livelihood grows over a period of time.
Okay, so apart from the financial discipline, I believe the financial attitude and the financial behavior also play a critical role. Correct. And one thing which I personally feel, that they may have the willingness, but the issue is the resources.
Yes.
Whether they have the resources to repay the amount which they have taken. They are willing, they don't want to be tagged of defaulter, they don't want to be tagged as someone who has not repaid the money. Correct. And that is why I use the word that they are much more disciplined in terms of repaying the money. Now I will come to
and the point in that is also, while the sourcing side of the business, while you have BCs, etc., reaching out to the customer to disburse the loans, which is all done digitally. Collection sometimes is even now very painfully manual. You have cash which needs to be collected from the people, etc. That is also one area which needs the entire ecosystems to start growing, because you should be able to take digital collections, etc. Because sometimes most of us forget when you need to collect, because you are busy with your own daily chores. So you should have mechanisms which is more digitized in the rural livelihood, so that your collections also happen digitally. What's happening centrally, an electric bill most of us can pay now digitally, which was not happening 5 years back. But does this happen in the rural livelihood? I still have doubts. Okay. You have to spend time on all these things.
Mr. Jagadish Babu, I have a question about the pricing of the loan. Yesterday, when DFS Secretary talked about the interest rate, very high interest rate, especially in terms of the microfinance institutions, where is the issue? Why the pricing are so difficult and why the prices are so high? Where is the problem?
Yeah, if you look at any small ticket loan size, or any loan for that matter, the biggest cost is always the cost of funds, right? The second biggest cost is the cost of reaching out to the last mile. The cost, because as Chitrabhanu said, a lot of collections is still cash. There's a whole lot of cash element. There's a whole lot of financial literacy involved. There's a whole lot of in-person people, front-end, customer-facing people required. That's a very strong operational cost. The third cost is the cost of credit losses, right? Like, because especially in an unsecured loan, like a microfinance loan, credit losses are a significant portion of cost. And the last year's incident that we have seen, if you look at the longer term over a period of 10 years, the credit costs have been in the 3 to 4% range, right? So, three components: the cost of funds. All of us borrow from banks or from DFIs or from raising NCDs. So, the cost of funds can vary from as low as 9% to as high as 15% for most MFIs. And I think the average cost of funds is closer to 13.5% for majority of the players in the sector. So that's the biggest cost of funds. So on top of that, we add their operating expenses. And the operating expense is purely a function of how many clients can a loan officer handle and how many loans can a loan officer disburse, right? So that's an area of strength for India. Historically, if you look at it, the cost of microfinance in a country like Latin America or Africa is upwards of 30%, 30, even 40%. So our operating cost is one of the best in the world, right? I think that typically we used to have operating expenses ratio of 6%, but now I think it's gone up to closer to 8.5% because of the overall reduction in the AUM of the portfolio. So you have a 13% to 14% cost of funds. You have a 6 to 7%, 6 to 8% cost of operating your network, because it's branch-led. It's not a digital network. Digital network won't really work with the set of customers that we are trying to figure out. In the future, maybe, but at this point of time, no. The near foreseeable, the future, no. The third is the credit losses. So credit losses can vary from as low as 2% to as high as 5%, depending on the type of customers, the ticket size that you're doing. So if you add up these three costs, so you cannot land below a certain point, right? So the only way that we can bring down the cost of borrowing to the bottom, first of all, we are much, much lower than most microfinance institutions in the world, whether you take Latin America or Africa or other parts of Asia, clearly documented, and this is evolved over a period of time. Second, if your cost of funds is reduced, so all institutions will be passing on to but seeing the high risk, it's an unsecured product, so therefore banks also have a risk premium attached to the pricing. So this is something that unless there is subsidizing funding, you cannot pass it on, right? Unless your operating cost reduces, you cannot pass it on. Unless your risk reduces, you cannot pass on the cost. So a lot of work is happening. I think central government has come up with a CGFMU scheme, which sort of supports volatility in the credit cost. So there is a sharing of credit costs, a guarantee. So for example, our organization, all our loans that we have been doing in the recent past are fully guaranteed by the CGFMU. So it sort of allows us to predict our credit costs and therefore keep our pricing under control. Productivity is use of technology, and productivity is a very important part of any organization. That's what has been helping us keep our operating costs low.
Okay.
And cost of fund is only to do with your long term, how you are well capitalized, what's the cost of funds. So unless you work on all these three aspects, the cost of pricing to the customer cannot go down.
Yeah, in fact, that's a question which I'm going to pose to Mr. Ajit Singh, that what kind of regulatory requirement is required to bring down the cost of fund? Because when we talk about financial inclusion, the important thing is that at what cost the person is getting the fund, and at what cost the company, like what Mr. Jagadish Babu was talking about, that at what cost I'm getting, because at the end of the day I have to think about margin, because I'm not doing anything for charity, I have to work like a business. So what kind of regulatory changes? I mean, we have talked about credit guarantee fund, but that credit guarantee fund has a limitation. That's a certain amount, only up to certain amount it can provide the credit guarantee. What other can be done?
So I would actually want to more of look at the operating model of the sourcing channels that we have, and also you talked about digitization on the operating cost aspect of it. So operating cost I think can be addressed assuming that there is digitization, assuming that there is less cost of what you call acquisition per customer, that we have cost per transaction for sourcing a loan, that cost definitely is addressable. On the cost of fund aspect of it, there are credit lines essentially which banks are providing. That could be one of the reasons. If you have a large base, if you could kind of collate and couple of NBFCs, they can come together and have some discussion. There are new age co-lending models which are actually being thought through, where risk is being shared between banks and NBFCs on 80-20 basis. Those models does exist. If of course that will again depend on the underlying assets and on the kind of securities or the guarantee that the loan carries behind it. That's one of the model which we could think of. But essentially, it's about the trust factor, as Mr. Mohan said, that we could get, and data will be the key, which is why the GM from NABARD sir was talking about. If we have more access to data, we will be able to create scores, create personas across various customer segment, across various type of businesses that they do, or various type of work that they do, and maybe try to create a model by which we could actually try to reduce on the score, and then try to get banks also participate in the lending. Moment we have banks lending directly to the end customer, a rural customer who's not having a robust credit score, then obviously the cost of fund could be reduced, because banks, they take liabilities and they lend. So I think what will be key is getting data, churning it properly, and ensuring that we come up with right set of scores and right set of models basis which we could categorize the customers and try to have a differentiated pricing or something of that sort, so that at least some aspect of the customer base we could address, and then gradually, slowly and gradually, with things moving, there is land digitization which will happen over some time. That will give us access to some data of the kind of yield that customers are going to have, or the kind of land that they have, that they already have. So that will give us some visibility. So I think the long run play, or the play should be, to answer to these questions, would be to go on data, figure out what are the secondary means of data which is very much credible for us to trust and provide this thing on the aspect of this. Credit loss aspect of it again is, moment you have data, moment you have credit worthiness of a customer established, then you are clear on the amount of exposure that you can have and the number of loans, amount of loans that you can issue to a particular customer. I think data will hold the key, and the assessment, credit model, underwriting theories that has to go into.
Yeah, that is why it is always said that data is a new gold. I mean, just not oil, but data is also new gold. And how take best use of that gold is very important to bringing down the cost. So now I will go to audience, but before that, just one question from Mr. Sameer, and then I will request all the audience to participate in this debate. Sumit, what kind of data uses you are having at this moment to build that? You mentioned about trust in your opening remark. So how you are using that data to have the trust factor getting more prominence?
So I'll talk about two aspects. There are two customer segments which we cater to today. One is the B2B segment, which is our own merchant. And the second is the customer which is being served by this Adhikari. So when I talk about the Adhikari, and I'll just add to what Mr. Ajit was saying, that how data can play a very, very important role in terms of taking right decision. So for our Adhikaris, where we are able to analyze data, look at their transaction, and also lend them and collect on a daily basis from their wallet, we've seen NPAs of lesser than a percentage, which really tells us that data really helps us build credit model which are sustainable and also scalable. Now, when we go to look at the customer, what kind of a common cord really helps us connect us, the bank, the Adhikari and the customer. We look at a customer who's been able to build a good engagement model with the Adhikari. That Adhikari is able to sell him multiple products and services, and the Adhikari is also able to make him financially literate in terms of telling him that, look, there are repercussions of you not behaving responsibly to a particular financial product. So it's a combination of looking at data, it's a combination of being able to build that engagement and service model on the ground, and when all of this comes together, I think the customer really starts to behave very responsibly.
Okay. Yeah, thank you very much. And can we have some questions from our audience? Anyone? Please. Yeah, please. Please give him the microphone. Please give him the microphone. Oh, the microphones are here. So please come closer to the microphone. Yeah. And also mention from whom you want to ask.
I'm Rajesh Gupta. I'm from Jharkhand SRLM. Actually, I deals in SSG financing. In Jharkhand, we have done financing in last 10 years for our SSGs. It's 9,000 crores. And in Jharkhand, the microfinance business is of 13,000 crores. And after SSG financing, now NRLM's focus is an individual financing, Lakpati Didi initiatives and all. From last 3-4 years, we are working on it. But the pace of financing, like we focused on financing through banks only. And that is also because of a high rate of interest of MFIs. So from banks, I just want to understand, like in SSG financing, we have in Jharkhand 0.56 is the NPA percentage. I'm talking about the SSG ecosystem that we have built in NRLM in last 12 years. Mm-hmm. And in the same ecosystem, we are now coming up with like more than 12,000 applications are lying, but that pace we are not getting from banks. So what actually stopping banks to come up financing in the same ecosystem for individuals?
Okay,
Thank you.
That's great. So your question is to NABARD or Federal Bank?
A very tough question. So I think during my initial discussion, one of the comments I made was to reach out to that large segment, the last mile. Sometimes reaching out to the last mile is one challenge we face. And the second challenge, I believe, is on getting some of the imprints of that particular customer. Many times, most of these customers are new customers in that sense. And the kind of KYC, knowing the customer, not just his address and all those things, which I'm sure Aadhaar helps us to get. But beyond that, on what he's doing, what is the visibility of what his cash flows, etc., is sometimes very difficult to capture. But I think maybe that's one big reason why the funding to that particular segment has not gone to the extent it should have happened. So what I believe is maybe we are doing some of good SSG lending in markets in the south, maybe in Karnataka, Kerala, etc., or Tamil Nadu, Kerala, etc., wherein we find that SSG lending per se has turned out to be one of the best options for a bank in terms of the overall delinquency, which you also mentioned about. And so we were able to scale it in that sense. But sometimes what happens, you need to have a partnership for all these things, because you cannot sometimes reach out to this segment of customers directly because of our brick and mortar problems, etc. So we have been using BCs as an option to reach out to this segment, which again makes it very costly. So it's a balance between these two sometimes, which has resulted in challenges in scaling this up beyond a point. But I'm sure banks would want to look at how we can scale this up over a period of time, and with getting more visibility over the data of these customers, which was what one of the discussions we had in the previous panel, on getting the details of the individual customers on what are the activities they are doing, what kind of financial viability they have got in their products, etc. Once you get visibility on that, maybe digitally we would be able to underwrite these customers much more better than what we were doing today. So I think there are things to improve in this. I agree to your point.
Okay. Any other question from this side? Anyone? Okay. So now, Mr. Roy, I will have the same question which he asked, that what is stopping institutions to provide them at cheaper? Because they are the intermediary. They are reaching to the last mile. Like what Spice Money is doing or what he is doing in Jharkhand. They are reaching to the people, but the issue is resources. What is stopping you?
NABARD has been always at the forefront with Money Purse. It is incidental that now a pilot in the state of Odisha is going on with the same name, Money Purse for SHG. It's a console, a digital solution for all their works, bookkeeping to internal lending and all that. We are actually driving this to create a trail. Earlier it was all the bankers. We remember when we joined NABARD, we had to go and see and understand how this informal banking system works. So that now we are putting on to digital trail. So this Money Purse NABARD is ready with for bankers. Anytime any bank approach, because that's also part of Reserve Bank of India's priority sector guidelines, where microfinance is also included in the priority sector lending. And if the banks do not lend, they have to park the funds at a very low rate of return. So that is altogether different. So NABARD is there to give impetus to the banks. Now, if NABARD is ready with the money, and if the SHGs are doing well and they require a credit, then definitely there has to be a genuine credit flow, which is decent and dynamic in nature. Why it is not happening? That's what Shishir ji wants to know. So there would be a multitude of reasons that I see, and as a practitioner, not as a bookish knowledge-based person, there would be some lack of communication, one. Secondly, lack of awareness amongst the SHG. We say that SHGs are very much into, lending and economic empowerment. They are tools for economic empowerment. Rightly said by our SLM Jharkhand that we have moved on from group financing to, like a pole star in the sky, like Lakpati Didi, and now Prime Minister. I am waiting for that day. Prime Minister will talk about Karorpati Didi. So that's going on. But then those are sporadic. You cannot have in a SHG, the scenario of SHG, where 15 Didis are there and all of them become Karorpati. Just keeping in view that their market area or resource base would be almost similar in a cluster base. So only one pole star we all know, which shows the north direction. So that way, what we are looking at is that more on what we started with, financial literacy. Once we have the model, how can we extract more out of it? How can we move forward? That includes the hunger for the credit part, hunger for timely credit part. And I am very sure that with digitalization that I spoke earlier, other panelists have also spoken about, Spice Money is here, PwC is here. We're looking at it. We are making it hassle-free, and there is, in coming times, things are not going to be like this. What pain point our friend is having from Jharkhand, I think that is only for a very short time. Looking forward, we will be digitally empowering people to take a decision. And I see a scenario when a SHG member requires money for emergency purpose, they don't have to go to that treasurer ki paisa de do. They will have their mobile to look forward to, and the SHG account will be debited, and their account, the hospital account or the ambulance account, will be credited. It's not too far. We are working on it. Thank you.
If I take the line from you that not just the flow, but continuous flow would be important, and flow at the time when actually they need it. Now, Mr. Jagadish Babu, I have one question about the businesses. We all are talking about, when we talk about financial inclusion, normally we talk about the individual, and we also have to think about the businesses, the small businesses, and that is why we have a scheme called Mudra, where the small businesses are getting collateral-free loan. How this is working, and where do you see after say 2 years or 3 years, what kind of changes you see in Mudra so that the financial inclusion would be much, much deeper?
Yeah, I think, Shishir, on the small business side, what we see is the financial diary of the household and of the business a lot of times get intertwined. Right? It's very difficult to separate the cash flows of the individual vis-a-vis the small businesses running. They get mixed up. Right? So in a way, a lot of small business finance also happens on the credibility of the individual, which means not only his business cash flows, but also overall his own credit record, etc. And definitely, microfinance organizations have started making a beginning. I think there's a lot of MSME lending, small ticket lending in the range of 2 to 5 lakh in the unsecured space, and micro secured lending in the space of LAP, loan against property, which again goes towards supporting the business. So that is happening in a big way. And I think going forward, a lot of the to some extent, the microfinance loans which are being taken by the women also end up supporting the families, small businesses, no doubt about that. But directly lending to the business and understanding the profiling of the business, assessing the credit for them would definitely go a long way in terms of making the Mudra loans more accessible to them. A lot of work is happening on that. I think we are seeing a significant amount of last mile institutions like microfinance organizations working with them, but there's a lot more that needs to be done.
Okay. Before going to Ajit, I will just ask one last question from Sameer. Where do you see after, say, 3 to 5 years, how do you see the entire business model in which you are working as a mediator or as an intermediary between the final consumer and the institution?
So, I've been working very closely in this space, I can say, for the last 8 years. My initial stint was with the Airtel Payments Bank, very much similar model to Spice Money. And the way I've seen this ecosystem transitioning, wherein the ecosystem only used to serve consumers who had a need for cash withdrawal. But I think today, cash withdrawal is just a basic core product on which we've been able to layer multiple other products and services. If you have to visualize with me a consumer in maybe a village with a population of 5,000, this consumer today relies on this physical network, one, to open accounts, second, to be able to very confidently deposit money in that account, so that trust element is definitely there. Third, this has also now started to help the consumers in terms of being able to generate leads for small ticket loans and also buy a small insurance product. Maybe 5 years from now, look, one reality is cash is not going to go away from our economy, but this network and the ecosystem will definitely transition from being a basic transaction-led ecosystem to maybe an ecosystem which will, one, help consumers get access to a slightly more complex financial products, which is on all the sides of the spectrum, be it investment, be it credit, and maybe other products that get introduced in the future. And also, I think the ecosystem will come definitely much more together in terms of driving, one, growth in Bharat, and also help us be there where we need to really aspire for being a Viksit Bharat by 2047.
Okay. And Mr. Ajit Singh, last word about the next 3 to 5 year scenario.
So,
No, Mr. Ajit Singh.
hello. Yeah. So I think a few of the points is already covered, but essentially the way farming happens may change. We will have a lot of things moving towards a predictive side, a lot of fintech players, a lot of companies. Again, there is a lot of initiatives that NABARD is trying to run by putting across a sandbox where they can get multiple new age players who could actually participate, and then they could enable the DMDs on the ground. So the way farming happens will change, and hence that will propel a lot of money, hopefully, in the hands of the farmers, which is the major problem statement essentially, which one has to address on. Second important initiative I could see the government of India is driving is Sahkar Se Samruddhi, the cooperatives movement which might happen. I would want to believe that financial institutions will have to keep an eye on this new segment which will come up, essentially public, private and cooperatives as a movement. By 2047, there is a vision by our Home Minister that we would have captured around 25 to 30% of the entire GDP as cooperatives. Moment that happens, then like cab aggregator is one such example where you have alternate of Ola, Ubers in place, where actually you have cooperatives, the driver becomes themselves the owner, therefore the middleman is eliminated. So cooperative as a segment for small and medium enterprises or the small shop, kirana stores, they could kind of come together, cluster their offerings, etc., and then have partnership with financial institutions and players like this. I think these are few of the initiatives and areas that, and obviously digitization will continue, data has to be important, and there are a lot of initiatives. Government of India is running, many supervisory bodies and regulators are also driving that. So I would want to say it's a combination of digitization and some of the initiatives that Government of India is try to run. All those things are in place, then we should be there.
Okay, yeah, thank you very much. And I think there are multiple Ds here. So first D we are talking about data, the second D we are talking about the digitalization, the third D we are talking about how to improve the distribution network, and the fourth D which is critical is how to reduce the delinquency. So if we work on 4 Ds, we can achieve the fifth D which is very important, that is developed nation by 2047. With this, thank you very much all the gentlemen to share their thought. And now it is time for food for thought, because now it's a lunch time and I don't want to be a, what you can say, a barrier between the lunch and you. So thank you very much for active participation. Thank you very much.
Please give a big round of applause for our speakers, such enriching discussions. Now I request Sri H.R. Khan sir, former Deputy Governor of RBI, to kindly join us on stage to felicitate our speakers. Please, sir. Mr. Shishir Sinha, Associate Editor, Business Line. Mr. Nabin Kumar Roy, GM NABARD. Mr. Chitrabhanu, EVP and Country Head, Federal Bank. Mr. Jagadish Babu, MD and CEO, Pragati Finserv. Mr. Ajit Singh, Director, PwC. Mr. Samir Nagpal, COO, Spice Money. May I request all the speakers to kindly come forward for a group photo, please. Please come forward for a group photo. Thank you, ladies and gentlemen. Please join us for lunch. Our next session would be at 2:30. It's a plenary session on regulatory framework for responsible lending, role of self-regulation in Indian financial landscape. Please join us for lunch. We'll meet back at 2:30 p.m. Thank you.